All right, so if you guys can see my screen, type number three into the general chat if you guys can see my screen. We're currently screen sharing Bitcoin USDT. So we're just gonna go over market orders because I feel like a lot of you guys are a little confused in different types of market orders. So there is three different types of orders you can place. Everyone knows that the most simplest one is instant execution. So instant execution is placing a trade at the current asking price. So for example, the current asking price is 69,256, right? So let's say you want to do an instant execution, place a buy, then it would be at the current price, right? So you'll be locked into that current price, whatever the market price is, plus a spread. That is instant execution. And then we have limit orders. So limit orders is either above or below the market. Same with stop orders. So the buy limit would be placed below, sell limit would be placed above. When would you place a buy limit or sell limit order? Buy limit order, you'd place it if you believe that you can get into a buy position at a lower price. So for example, let's say Bitcoin has been ranging between this level, which it has been, and you know that it's expected to drop into 69,000, approximately 69,000, right? So around this level, it's been consistently dropping. So 68,936. So let's say you don't want to buy into the price now at 69,255 because you believe that Bitcoin will retrace into 69,000. Then you can place a buy limit order right here. And this will be a future pending order. And once the price has met its criteria, which is 69,000, then it will trigger a buy limit order. It would trigger a buy position on your absence. And then conversely, if you're trying to place a sell, because you've been seeing that there's lots of rejection and resistance at 69,900, you could place a sell limit order if you believe that it's going to hit that price range and then retrace or pull back. A good example of where you guys could have potentially placed a sell limit order was when we were hitting near all-time high. So all-time high was at 74,000, and it's pretty obvious that we weren't going to break it. There was just not enough momentum. So you guys could have placed a sell limit order right below, and that would have been a good potential area to place the trade. The easiest way to place stop orders and limit orders is just by looking at the previous highs and the lows. So again, the previous lows is around 68,900 with the Bitcoin, the recent previous lows and the recent previous highs has been 69,900. So we have a little zone thing going on. This zone, it's been retracing back and forth. Of course, we did have the momentary breakout to $71,600, and it just pulled back almost instantly. So now we see a lot of liquidity pools at 71,000 and approximately $600. Um, and then what I personally like to do most, I'm sure you guys know, I love placing stop orders. Why do I love placing stop orders? Because when you're trading a trend-based trend-based pairs. Okay, so I'm gonna explain what trend-based pair is. So trend-based pair is pairs that does not really respect support and resistance as frequently as some of the other pairs. Okay, and this is something that I came up on my own. So I'll give you a couple examples of what a trend-based pair is. US 30, XAUUSD. BTC, it can be like a hybrid because sometimes it does respect support and resistance, and then sometimes it doesn't. So it's like 50-50. But US 30 and XAUUSD, um, so any of the JPY pairs, the yen pairs, they're very trend based. I'm gonna explain what that means momentarily. Okay. So when you're trading trend-based pairs, such as US 30, XAU, GBP, JPY, and USD JPY, you have to you have to understand that support and resistance is not really going to hold up all the time. A lot of times it's going to break right through. So you can't just say, okay, I'm gonna place a buy at 69,000 because it's gonna hold that support. No, you can't do that with trend-based pairs as much. I'm not saying you can't ever. Um, Gold does find situations where it finds support and resistance, but it's designed to break through. It's designed to be trendy. So it's better to catch those trends. So how do you catch those trends? Simple. You place stop orders below and above the market. What I personally like to do, I like to place the stop orders away from the current trend or away from the current range. So right now the range with Bitcoin, for example, is between 16,900 to 69,900. So if I were to try and catch this trend, and let's say it's about to like dump or pump, I'm gonna try to catch it on its way back to its previous high. So then a good area that you could just ballpark it, 70,500. That might be a good buy stop because if it triggers that buy stop, that entire rest of the zone is now in a profit range. So that would be in a profit range. And then obviously I will place a stop loss right below in case it retraces or decides to reverse after triggering those stop orders. Now, in the perfect world, yes, it will continue to shoot upwards or downwards, but you have to understand that sometimes it will reverse instantaneously. Sometimes, most of the times, it does not if it's trend-based pairs. Um, so you don't want to potentially get stopped out by keeping a stop loss too close. You want to leave it close enough, but not too close where it gets retraced and then stops you out. And same ways, when it's starting to dump, you want to catch that nice little trend, place a stop order fairly below the previous low. So as you can see, there's no support anywhere near here except for this, like all the way from back here. So yes, there is some support back there. However, if we were to able to break through this, it's most likely you could place nice stop order and catch that drop with the BTC. So this is one way how to do it. Now there is the more complicated way of figuring out um, the exact amount that you're going to use for stop orders, and that's the average true range. Well, for the sake of this lesson, I'm going to simplify things and not go into details with average true range. I do have a separate video that I already created that goes over the average true range. And I'm gonna share that video with you guys if you guys need help utilizing the average true range to identify the stop orders. But more so, this is like the easier way to go about it. Just ballpark, like look at the chart overall and look at where the previous low is. So the previous low, again, 68,900. Previous high, 69,800. So that's the recent highs and the lows. And the idea is to use anywhere between 250 points or 500 points deviation. So you wanna give that differential above and below depending on which direction you're gonna predict that the market will go. And sometimes I'm sure you guys seen in my Telegram chat, I have shared those analysis on the chat, insisting that I am placing a certain trade that is trend-based stop orders. I love stop orders. And most of you guys know we've made lots of profit at this point by using those stop orders. And if you're not already in the Telegram group chat, which I think 99% of you are, and make sure you tune in to that Telegram group chat because I've been sharing all my trades frequently. Um, but that's basically it. Like it's very straightforward. I personally do not like to use limit orders. Oh, I have to actually know something else for you guys. So limit orders more suitable for markets that are stable consistent. Okay, so I'll give you guys an example. Euro USD, USD CAD, um, AUD USD. Okay, um, sometimes BTC USD, sometimes it can be suitable. So limit orders are more suitable for markets that have respected the same highs and the lows. So respects the support and resistance. So UCAD, Euro USD, AUD USD, these are very like stable pairs. When I say stable pairs, I'm not saying it does not have volatility, but it doesn't have as much volatility. And even when it does, it'll just go in like a zigzag format. It'll hit the highs and the lows, the same highs and the lows over and over. Okay. So limit orders is more suitable to trade using markets that are more stable and consistent. Whereas for trend-based pairs, um, it's better to use stop orders because you want to catch the trend as it drops, or if it spikes up, you can catch those points and make significant profit. So it's definitely more um, each of the orders are more customed to be used in the one or the other, right? And again, you can still use limit orders with the trend-based pairs, and you can use the stop orders with the stable markets, depending on condition. Like I'll give you an example. Let's say there's non-farm payroll, like we just had yesterday. You could use the stop orders on UCAD. You could use the stop orders on BTC. All right. Um, I just would not recommend it just because they're just not gonna share the same level of volatility. And for stop orders, volatility is your best friend. Volatility is key to making a significant profit. Now, for the sake of this lesson, I'm just gonna keep everything strictly stop order and limit order based and instant execution based. However, however, the ATR lesson will definitely attribute significantly towards this technique because the ATR will help you guys identify where to take profit, where to stop loss, where the position should close. So I definitely recommend you guys go over my ATR strategy in my either my YouTube or I believe I may have some reels posted on my Instagram page. And then last but not least, let's talk about the instant executions. When should you place an instant execution? So the most obvious answer is when you feel a good opening. So let's say it's already hit the current low and currently the mark is trading near the low. In that point, if you genuinely believe that it's going to support at that level and it's going to reverse up, that's a good area to place a instant execution. So let's say the market is trading right here, where that wick was, and you see that nice wick up, you can get into an instant execution. Um, Me personally, I like instant execution. Best time to get in when trading trend-based pair near previous low, near previous low or high. You see, you observe a wick movement. So let's say you see a nice wick occurring, so nice pullback. So like high momentum. Okay, that's way too small. Make that like 24, perfect. So let's say you see a nice wick movement, like for example, right here at 68,928. It just pulls right back. Sorry, that's 6,000, no, 68,800. So it pulls right back, right? You see that nice little wick action? So when you see that wick action, you can snipe the fuck out of that wick, hop into that buy, and get into almost instantaneous profit. How many times have you guys seen me call out a trade in the Telegram chat that I just hopped in a buy and sell and it instantly gets into a profit? Type number three, if you've ever observed, I place a trade and it instantaneously get into profit zone within split seconds. How many times that happened to you? In Discord chat, general chat number three. So when that happens, and I'm letting you guys know what I personally observe on my side of the screen, I see a wick action and high momentum trade occurring. So when that happens, it's more than likely it will pull back and create that nice momentum into that trade. And that would be a perfect time to do an instant execution. So that being said, I'm gonna give you guys a quick assignment to do. Let me pause the recording.